Welcome to TradeTheNBI.com. This is John. This report is for the 18th. Well, it continued. New highs. No shock to anyone right there. Though we might see a little bit of softness here as we get the spike of orange. A little drop off of midterm buyers. Shorts are still below zero though, so it's going to be hard for them to mount any kind of defense. And of course, power mode 2, directional spiking up. We're still in this yellow zone. We haven't quite reached a red, but it's also a warning that you could see a little bit of softness. And of course, there's the ADM yellow right there, right around 36.79 range. So 37.14, I would expect we make it towards the 20. Well, what was the high that we had? 23. So this is the same number I talked about before. When you break into that new zone, that 23 pops up on a regular basis as an attraction point. Numerologists, whatever, can get into it, but it just happens to be a typical reaction from the market. You can complain about it, but it is what it is. From an NQ standpoint, likewise, new highs. So everyone's expecting this massive stimulus, and of course, that massive stimulus means huge devaluation of overall U.S. currency because of the expected inflation that should follow. Now, of course, we've been talking about inflation for, seems like a decade plus, all the way back from 2009 when the first stimulus. But again, we always talked about the counterbalances, and this is why we check things like oil as well as gold because they have an impact. And while gold has done well, it hasn't done as well as it should have. If you had seen any inflation, this would have skyrocketed significantly higher than it already is. We've had a nice move up, pretty consistent with the expectations. As the stimulus potential failed, we saw the drawdown, and then as talks started again, things popped up and nothing really happened, and now it's starting to heat up again, and that will certainly create a bounce going forward. So we started with huge bump, and I talked about this in the report, then positive extremes. I marked them just so that you would see them. It's just a matter of that waiting for your signals. So we got the first DOC spread that came back, and it took a long time. It finally filled the first section of it right there, and then we popped back up again and came across. But look at this run of no steel reset. Traveled all the way through, and then right after the close, you get the signal, and sure enough, come all the way down to fill the main positive extreme. Go back all the way to the beginning right here, just like clockwork. Gotta love it. And of course, once we did that, it's a big bounce back in pre-market again, where there's just easy mobility as far as shifting the overall trade, and takes us actually to even new highs. We got all the way up to that exact 23, retraced right off of a couple positive extremes within that setup right there, beginning at the 37.15 range. So that will be another one actually in between. We can go ahead and mark it just to have it on there. Just right here for the low at 08. It's not a big spread between that and the previous one around the 05, but it is nonetheless just as valid. And you can see there was quite a range that took place going back through it. If we shrink the chart, we ended up with a lot of range-bound conditions within what was the trading from Thursday. So we'll go into the shortened week for the Christmas break, and that'll be fun too, as we have lighter volumes, which allow for greater swings, and it's just catching the momentum of any of these plays and following it through, and that's what we look for. So we'll just keep at it. As always, though, trade well. We'll talk to you later.